this ETF. It's called the VanEck Social Sentiment ETF, but the label's BUZZ, Buzz. And what does this do? What does it do? So this ETF tracks the next generation AI US listed sentiment leaders. So this fund takes content from social media, online sources, news articles, blog posts, and it tries to find out what's hype out there, which stocks are the most popular among social media. This fund is currently up 35% year to date compared to the S&P. It's pretty much 3x the return of the S&P. And in the past year, it's up 61%. 61% in the past year, while the S&P is up only 17%. Buzz showcases the potential power of social sentiment. A lot of retail has pretty much controlled the markets lately. There are risks, but hype always fades away. Social sentiment is always changing in the retail world. Do focus on a lot of stocks that are considered meme stocks. Recent ones in the past year: Coinbase, Rocket Lab, SoFi. Let's go ahead and check out some of the holdings they have. Total net assets, so 100 million in total net assets. That's not too big. That's actually a small ETF. Expense ratio is below 1%. The ETF just started in 2021, so the track record isn't really there yet. I mean, 4 years as a track record is not a long time. Okay, as a percent of net assets, we'll go with the highest percentage. Some of the biggest holdings they have: Tesla, United Health Group, Alphabet, SoFi, GameStop. GameStop is their 5th biggest holding, and then Hims and Hers, their 6th biggest holding. You also have Robinhood, Nvidia, you have Google, Palantir, of course. This ETF uses artificial intelligence to analyze and track millions of daily transactions, millions of daily interactions on social media, news articles, blog posts, and the fund selects 75 large cap US stocks, mid to large cap US stocks, with the highest degree and bullish perception of investor sentiment. So just some notes on the VanEck Buzz Social Sentiment ETF. The market cap minimum they invest in is $5 billion market cap. The trading volume requirements: at least 1 million average daily trading volume per day, and requires consistent mention over a rolling 4-quarter period. They don't invest in short-term viral trends. The top 75 stocks with the highest positive sentiment scores are selected and weighted according to their rankings. So the fund heavily invests in a lot of technology. A lot of these stocks you'll see on Twitter, online investment forums and discussions, social media attention. This ETF has delivered impressive returns in the past year. I think in the past year there's been a lot of shift in the investment landscape where retail has taken control of a lot of these trends that are happening online. Most of it will be in US stocks, and the top 3 are either consumer discretionary, financials, and IT. This would have tripled your returns instead of just investing in the S&P. But yes, again, there is some risks. Social trends are always changing. But what are the key benefits of investing in this ETF? Well, number 1, access to crowd intelligence. This ETF provides investors with a way to harness the collective insights of millions of investors on social media, online investment discussions. A lot of stocks that are talked about often precedes what happens in the stock movement, and this ETF offers early signals of stock performance. Number 2, this is a technology-enhanced stock selection platform. It's all AI-driven, removes human bias and emotion from the selection process, just has a sentiment score to identify stocks with the largest possibilities of positive perception. Third reason why this thing is interesting, they rebalance. There's a rebalancing, and it captures changing sentiment in the social media trends. So some of the notes they have right here: Buzz's monthly rebalancing ensures the fund stays current with evolving market sentiment and emerging investment themes. It is also pretty well diversified. You do want to be investing in most of these meme stocks. It's kind of dangerous and also it fluctuates way too much when you're investing in only 1 or 2. They have 76 total holdings for a $100 million portfolio. That is a pretty diversified asset portfolio. Rather than trying to pick individual stocks that are trying to go viral, you gain a diversified exposure to 76 different hype stocks, meme stocks, across multiple sectors. But again, not financial advice. There are a lot of risks in this type of investing. The biggest one will probably be short-term focus. Social sentiment can always change rapidly, and that leads to a lot of turnover in this ETF, which means paying a lot more taxes. This fund also favors more growth stocks and trending companies, which may not suit all investment styles. Like this type of investment will be more for growth-oriented investors and people that want to take a little bit more risk, are comfortable with higher volatility, younger investors who have more time. But for those value investors who focus more on fundamental analysis, or conservative investors looking more for a dividend-focused returns, I would probably look elsewhere. I think going forward, we'll be keeping track of this ETF just so we could keep updated with all the trends happening on social media and all these investment boards. But as of right now, check out this ETF, VanEck Social Sentiment ETF, a buzz, cool little ETF if you guys want to diversify and try something new. But other than that, again, not financial advice, guys. Let me know what you guys think on this one. Thanks for watching the videos, guys, and we will see you on the next one.